Let's go to CommSec, Tom Piotrowski, with all the latest details regarding the markets. How are we looking today, Tom?
Pete, we're going to get off to a fairly flat start this morning, so the futures are telling us we'll be up by around 0.1%. So as the week drew to a close in the US, we were privy to some hotter than expected inflation figures once again. So you might recall earlier in the story we'd seen stronger CPI figures. On Friday we had a hotter than expected reading on producer inflation. So that did scuttle share markets on Wall Street somewhat. But I think a feature that we've shown to be quite significant in recent weeks is the resilience of US markets. And they finished lower, but only by a modest margin, down by 0.5% for the S&P 500 in weekly terms. Again, to be subjected to a strong inflation number that's pushed out the horizon for rate cuts, to be down by 0.4%. Not such a bad outcome under the circumstances. So as we look ahead to this week, Pete, it's a big week for numbers, both locally at home. We've got a cavalcade of organisations reporting locally, particularly out of the resource sector. So BHP, Rio and Fortescue amongst them. We have the wage price index on Wednesday. That will be critical in terms of calibrating what the possibilities are for the RBA in terms of rate cuts, rate hikes, doing nothing, all of that caper. And today we've got the Aussie dollar trading at around 65.3 US cents.
Alrighty. Tom Piotrowski, we will talk to you in a little while.